minutes. Hopefully everybody is doing amazing. Everybody is great. Now I want to talk about Friday's price action and what I'd anticipated to to happen. And I guess I have all the trades for the week, and I review the Friday trade. On Thursday, on Wednesday, we had a loss, a single loss, one loss for the week. On Thursday, also a loss, so we had two losses for the week. But on Friday, we had a 2R, which took us to break even. For those who don't know what I mean by break even, I had lost 0.5% of my account here and 0.5 of my account for this trade. So if you combine 0.5 and 0.5 gives you 1% of my account, but on this trade I made a 2R, whereby now I gained 2% of my account, 1% of my account, sorry, because I usually risk 0.5. If this is a 2 to 1, this is a 1 to 2 risk to reward, and then for this trade I would have gained the two losses I had lost from these two previous losses. So if you can remember from what I had anticipated before is we want to see the market gravitate to this level, which I'm expecting to see next week rally to this level. I was expecting a drop into this weekly fair value gap, which did happen on Tuesday. We had this retracement higher. On Wednesday the market, and Thursday the market rallied lower. Also on Thursday came lower, and we had a good reaction, or a perfect reaction, of this weekly fair value gap consequent encroachment, or the midpoint. So if you go to the higher time frame, I don't know whether these charts will be too dirty for us to see, so try to explain. Yeah, we cannot see it clearly, but I guess we can check it on inside that 1 hour, if not 15 minutes time frame. So what happened is on Friday we had this reaction of this weekly fair value gap. You can see the midpoint. We had this candle drop, tapped into the midpoint, then you can see that sharp retracement. Since I've been bullish, so I was targeting a 1 to 2, of course, and usually when I'm targeting, I usually target some low hanging fruit. I don't usually go for, maybe if I was to go to this, I could have held for the during the weekend. Yeah, I could have held, but no, I thought it was to take profits of these highs that were here. So these were highs that I was targeting, those highs, so that want to give me a 1 to 2 risk reward. Now let's talk about my analysis. So mostly I was watching the 30 minutes mostly. By the way, I did these live streams, but at the end of the day I realized that these trades had no audio, so I really couldn't upload them on my Insta audio because I was talking as the market was moving. So I won't be uploading that, but I will upload this because I've checked everything is okay, the microphone is okay, so I will upload this. So what happened, or how did I read price on Friday? So what I saw is, I don't usually trade during the London session. For those who don't know, the London session, it's from 2 a.m. To around 5 a.m. So what happened during London is, you can see the market rallied lower, took out this Thursday's low, which was the previous day's low, as you can see here, the PDL's low with this sweet emoji of mine. So this shows that we have the sell side liquidity of the previous day has been taken. Also we have this other internal low, so was taken. So after seeing this reaction and waiting for the New York session, is after the liquidity had been swept and a key level, which was this weekly consequent encroachment, has also been tapped into, and we can see how this candle lost strength. Then we saw these a rally of price higher. And what I saw is we had this 30 minutes breaker. And what do we mean by a breaker? We have a low, which is this low that created this high. Then the market reversed and closed and took this previous swing low. So we have the previous swing low as liquidity engaged. Then we can see the market rallied higher, and we can see we had a higher high being formed. This bullish high, this bullish candle created a higher high that took these buy side liquidity above this previous high. So this bullish candle to us is now the bullish breaker. That's what you can see. I have it labeled there as the 30 minutes breaker. And what do we see? We can see as the market rallied higher inside the 30 minutes, we created a fair value gap, but the market rallied lower, dipped into the 30 minutes breaker. This was the level where I placed my stop loss below that 30 minutes below that 30 minutes bullish breaker. And I said the market retraced. I was afraid that the market could take me out because we had these fair value gaps here, but it didn't, because we also have this 30 minutes order block there. The market tapped into that order block as well, this 30 minutes breaker. Then we can see how it did lose its strength. So the confluences I used was I ensured that I'm inside this New York kill zone. So I had these two lines drawn. So that's number one, timing. Then I saw this proper or good reaction from these consequently fair value gap consequent encroachment. So this conference number two. Then number three, I saw the previous day's low liquidity being grabbed. That's number three. Also some internal liquidities, sell side liquidities being grabbed. So that's conference number four to me. Then I saw these clear market structure shift that had formed. Conference number five. Then I was observing bearish arrays being violated, as well as bullish arrays being respected. So the bearish array that was violated, or we had these bearish fair value gap here that was to support prices lower if it were to be bearish, but I saw it being violated by the candles closing above this fair value gap. And also we had these order blocks, which are also the breaker. The breaker was to support prices lower, but it was violated. And once it was violated from being a bearish order block, it now shifted into a bullish order block, which at the same time is a bullish breaker. And so our target, as usual, a 1 to 2, and we had this low hanging buy side liquidity, which was our target. We hit our TP, and yeah, it was a good trade, but expecting to see next week market deep into this level, which I've been anticipating before. So something else which I was to talk about, but before that, if you're listening to this and you've yet to follow this channel, kindly follow and like this video, so that we may grow our audience and maybe we may learn together. So with this trade, with all 6 confluences, I have to draw, we must know the bias where we're expecting the market expand to. And as you know, I've been bullish for the week, and that's why I only took buys. Over here there's a buy which ended up as a loss, another buy which ended up as a loss, but I had this sell on Monday because I wanted to see price first retrace to this level, from which I'm expecting to see a retracement to the draw on liquidity or the weekly expansion. But it usually happens, and yeah, it's a normal thing, because we must lose, or losing is part of the game, and we have to understand how we are losing. So this is where risk management comes into play. So it's a good thing that we get it wrong, but we also get better, and also try to uh, all round get better. Maybe technically I'm better here, but maybe psychologically or risk management wise, I'm not somewhere, right? So with losing, it it's a stepping stone to unlock your other 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 skills, because maybe the these other skills are also very essential in this trading. So that was it. This is the lesson. Risk management is key, and also technical is very important too. So because psychology without technicals is a zero game, and also technicals means trading psychology and risk management, it will be a horrific endeavor to dive into. So this was this video. So remember to follow and like this video. So until next time, guys, see you.